Hey guys, thanks for joining today. We are waiting for Ryan to come and hang out with us. It's always technical issues. What do you expect? But while we're waiting, I always got, we got some stories. So I was just in New York over the weekend at the largest crowdfunding conference in America. I got to give a keynote speech on the new strategies, new ways to actually raise capital. Great time, but even more importantly, if you're old enough to remember Swatch watches, I just got one, but kind of pretty interesting. It's a Swatch watch that is an Omega Speedmaster collaboration. I've never seen anything like that ever, but good times. Now, I bring this up actually not just because Swatch watches are awesome, but I got to take a team of attorneys who were out joining me and kissing babies, meeting new people to a 2-star Michelin restaurant. It was called The Modern, and amazing meal, amazing time. But one of the most important things about it is, well, the ability to share with my team really what we do and how we do it. So hey, Ryan, thanks for joining. I'm just finishing up a little story as we were waiting for you. And it's all about, I just took my entire team of attorneys to this 2-star Michelin restaurant in Manhattan, had this amazing meal, got to share everything with them. But it really, you go to one of these Michelin star restaurants and the food is always good. It is always just amazing. But the real secret of it is like the full and total experience. How it's almost like synchronized waiters, food service, busing. They just had some guy jumping around and making friends and chatting it up with people. And it's every time, and I'm a total Michelin star addict. It's all about that experience. And that's what we try to recreate in the law firm and how we work with every client. But just because I got to actually share with my team, this is why we do what we do and why we're so demanding about really staying on top of everything, making sure there's always a great experience. So I was just sharing that as we were hanging out and waiting for you to join.
Well, first of all, thanks for having me. And yeah, I can second that. Obviously, since you and I've engaged years ago, your service has been top notch. That's why we're going to open up another offering with you now. Actually, I don't even think you know about it. I called Arden the other day and said, "Hey, I got another offering, another 506C I need to open." So, yeah, you guys have been great. You guys are very knowledgeable, which is important, especially when you're dealing with the SEC.
I totally appreciate it. We're not here to talk about that, although I'm always happy to talk about how amazing my team is. But I do. And, you got some deals on the table. And if it's okay with you, I'd love to talk about that as we're kind of going through what you do, how you do, and how you make it all happen, bringing investors to the table.
Sure.
But to kind of kick things off, could you tell us a little bit about your background and really who you are?
Yeah. So, born and raised in Southern California. I started my real estate venture about 20 years ago, I think a little over 20 years. I started in the lending space prior to the 2008 crash and opened up my own mortgage company. And that didn't work out, just like everybody else's
Ooh,
company in
I
2008.
was living in Vegas at the time, and that was painful.
The foreclosure capital of the country, right? Was Vegas for sure. And then second to that was the Inland Empire. So it's kind of funny that you brought that up. But after 2008, right around 2009, which is still in the mix of it, I met a guy actually in Vegas, was a very wealthy guy who was originally managing a pension fund out of China, but he ended up opening up a small family office, and he was a subsidiary of a kind of government contract from the FDIC. And what they were doing is they'd have a bunch of analysts that would go in and analyze all of these defaults that were on these banks' lines. So all of these warehouse lines, you probably remember this.
Oh my
And it
God.
was
Yeah.
called REO Mac.
Millions were
Rio
made.
Mac. Billions were made, billions. And so ultimately what they were doing was they had the back office support to provide billionaires the access to acquire a ton of distressed assets, and then they would provide the back office services to offload those assets, work with guys like me on the ground for, had asset managers and REO agents and short sales and so forth, and they provided all the back office service. So I kind of was able to, after 2008, get into more of the private lending sector, but also in the capital raising sector, and understanding how money moves, and where you have distressed assets, a lot of these guys were making a whole lot more money. So I was exposed to kind of a top tier institutional capital deployment in distressed assets early on. And so after that, I kind of stayed in it. Had always done private lending. I would think I was one of the top producers in the country for many years, and that built a great reputation. And over time, as doors opened, I just started raising money through my network and doing equity deals and doing more single family stuff. And then over time, just kind of got more into commercial, and so just kind of walking up the chain. And now we have I think right here in Arizona, we have about $100 million in projects here. We've syndicated probably over $500 million now with other developers and doing like co-GPLP deals. And now we're kind of developing our own projects and raising our own capital. So we're kind of vertically integrated at this point.
Love it. And I want to get into that more, but kind of the way that you've actually accomplished what you have. But I got a really important question for you.
Sure.
Where are you living nowadays? Is it Arizona or is it still Southern California?
You know what? I don't know anymore. I feel like I live in a suitcase, but I'm all over the place. So we have projects throughout. Sometimes some not as much now, but even a new one that might be popping up in Tennessee, Texas, Arizona, California. I had some stuff in Florida, so I was kind of all over the place. What's been nice is I've been able to scale and bring on some people that can help me. I brought in a CEO. It'll be 2 years in September. So now I could be a little more business development. I could spend more time with my family and my kids, which is really important. So I kind of took a pay cut to do it, but the conviction of not being home has been hard. So I have 3 kids and 2 kids that are in high school that need their dad. And I really felt like I needed to be home more. So I'm at that point where I'm kind of staying. So I'm like, I have California, but we're selling our assets in California. Right now I'm in Arizona, and then we have a place in Tennessee. So I kind of go back and forth between all 3 places.
Well, so the real reason why I was asking is we're in a weird place that, living in Texas, I've been out here for over a decade now. I grew up in Texas, but we're one of the few weird ones. Everybody is coming from California to Texas. We're looking to move back to California. And actually, we would have been your neighbor if you're still around. We're looking at that Southern California wine country, hill country in North San Diego County. Hopefully we'll end up being neighbors, but we'll see. Maybe just in passing every once in a while.
Well, we actually still may stay out there. And the reason is my son plays very competitive baseball. He plays for a Division I team. So he's deep into high school and kind of deep into the mix. We've invested a lot of time and energy into him. So if he continues to move up the chain, we'll probably stay at some level in California for him. But other than that, if he decides to migrate, he's got some teams out of Phoenix. So it may make sense for us to stay in Arizona. So we'll see.
Awesome. Love it. All right. So, we finally got some people showing up. It always takes people a little while to come by, say hi. They're joining because you have truly done an amazing job raising capital, $500 million in projects. And I know for a fact that a big driver of your prospective investors, your investor community, comes from online marketing, comes from social media. And you know what? You've got the secret sauce that, frankly, everybody that's showing up and saying hi right now, they want to know how to do that too. And I always get this question like, is it truly possible to crowdfund? And you're the epitome example of, yes, you can get out there, start shaking the bushes and make it happen. But people are still skeptical. So we need to hear your story about how you're doing it on social media and creating those prospective investors.
do it.
All right. Well, I mean, to start with, I mean, you started from, hey, you just were posting stuff because that's what we all do. Here's my kids. Here's my kitties. Here's just the fun stuff. But you actually transitioned. Well, everybody does. I actually don't know if that's, I don't even know if you have kitties, but I know you have some kids. You started developing the social media, your personal channels, other channels, into more of a community and bringing an engaging perspective and get investors. Kind of starting at the very beginning when you were just thinking, this is what I'm going to pursue and this is how, well, I'm going to make it happen. Could you tell us a little story about like your beginnings of marketing?
So we were when I was really leading the private money lending space. I had moved away from a broker into a larger lender. It's called Anchor Loans. They're actually out of Calabasas. They got bought out by a big firm in New York, and so I kind of had an open checkbook, if you will. And so I was migrating into much larger dollar amount transactions, so more stuff that was in Beverly Hills, Bel Air, Santa Monica, Malibu, some pretty high-end homes. And as you know, and what most people do know already, is that once you start putting zeros behind real estate, you typically start raising capital. You start getting equity partners, and it's just like a normal practice. So as those things. Yep, and exactly. And as doors continue to open, we had to try to figure out a way to fund these loans and get them done. And we ended up utilizing. We did one equity deal where we utilized my existing Facebook. So this was a while ago. This was Facebook, and I had a lot of followers for real estate, from brokers and real estate agents. And we had a lot of people that would come to us and say, hey, if you had any investment opportunities, let me know. And I kind of had kind of a wholesale division too, where if we were funding a loan and the borrower didn't perform, we'd offload it to a new investor, and that investor would take it over. We'd fund the loan, so we wouldn't lose the loan. But coming to find out, what was happening is a lot of these investors had to pull the trigger quick. And so we would open the door and say, hey, look, I don't have a property for you to flip, but I have an opportunity that you can invest into a flip and probably do less work to get the same type of returns. And that's what kind of launched it. So we ended up funding our first deal, and it worked out really well. And so ironically, and I think this is just kind of right place and right time, is I was funding a loan for a guy. It was actually his mother that was flipping properties up in Sacramento. And believe it or not, he was kind of the pioneer on building LinkedIn investment group networks. And at the time, he had owned or managed, if you will, the first, second, third, fourth, and fifth largest real estate LinkedIn investment groups on that platform. So he came to me and he was in need of capital, and he goes, hey, I'll sell you my second basically database for $60,000. And I'm like, email database for $60,000? You're out of your mind. You're crazy. This is before emails were even a big deal. And at the time, once LinkedIn was,
and anybody listening, you don't have to do that. This is a ways to not spend $60,000 to barely get launched.
And it's definitely morphed since then on how to really utilize $60,000. You can get more probably out of it. But what happened was LinkedIn at the time, the platform was set up where if you were able to drive people to a group that you managed, you were able to extract their email addresses. Now you can't do that. They just have to be in there unless they put it up and populate it and you go there and dig it. But when you move those over, you can extract a CSV file and actually upload it into like MailChimp or what have you, do a mass email. So what was happening is we had 935,000 emails as far as people in this group. So we extracted those 900,000 and sent out one email. And the idea was, my agreement with the guy was, hey, look, if you guys can raise me a couple $1 million, that'll make me $60,000. That's my commission in essence on this thing, right? So what I'll do is I'll see if I could raise the capital. If we raise the capital, I'll give you $60,000. He goes, done. So we actually reached out to, it was actually another attorney that worked for you at the time. And I said, hey, here's my marketing material. Are we good with it? She said, signed off, good to go. So we sent out an email on Friday and we raised 1.2 million by Monday. And so this is just on an email base. Yeah. So I was like, okay, we have something here. We could really utilize it. So that was kind of the start to it.
I don't know if you were tracking this, but it sounds like you sent out almost 1 million emails. did you keep up with like the conversion rates? I mean, people want to send out email blasts all the time. Does it really work? You did 1 million, but you
Yeah.
raised some money.
So then it worked. We didn't really keep a metrics yet. It was so new that we didn't even, honestly, I didn't even believe in it if it was going to work or not, you know? So, but it did. And then over time, we did start tracking that. So what happened was when it was becoming so fruitful, I was like, you know, this is, and then obviously the Job Act, right? As far as 2013 and being able to solicit for capital mass wise. And all this was post that, by the way. And so we really kind of got to a point where I'm like, look, you know, Realty Shares, which was the pioneer in crowdfunding, you know, they did like 800 million in 5 years, and they really started doing well. And so I started watching what they were doing. And then CrowdStreet came out and Realty Mogul came out and all these other groups started coming out. I'm like, wow, they, you know, but they went and got seed rounds. And so they had a lot more help. I didn't have that ability to go just raise a bunch of capital and dump in there 20, 30 million at a time. So I kind of had to do it from scratch. And so, but I utilized their practices, and ultimately they are data-driven guys. And so we did start getting to a point where we were tracking the conversion rates. Now, when it comes to the email world, it's very, I would say it's probably not the smartest way to spend your money. Unless you've already established a huge database and you've been farming to them over time, then it's really not the best way to go. You want these people to be opted in, double opted in, responding, communicated with them at some time over the years, and it does work. But if you're starting to do crowdfunding, building out an email list is something you should consistently do, but don't bank on that as being the only stream of capital raising, because it's kind of the lower level part of really being successful in capital raising. It's a tool that you need to have, because you got to have all the tools, but that's not one I would hang my hat on.
All right. We've got a question besides, hey, Dan, Zuri, it's amazing to see y'all. Thanks for joining. Doug asks, what type of asset or offering were you raising capital with this email campaign? And it doesn't, I know that you're not heavily focused on email, but when you were, you had an amazing response. What were you funding?
It was all real estate based. So this was a single family real estate asset.
Okay. Got it. And in terms of real estate, it sounds to me like you were actually funding during the Great Recession. And you bring up, and I want to kind of mention to everybody, there's always real estate cycles. And right now, it's a tough time to get deals done and underwritten where the numbers make sense.
Yeah.
Because of those high interest rates.
Yep.
But that being said, now's also the time that millions are made. So it's the time in the world right now to be looking at real estate.
So first of all, and I can go off on tangents with you forever on it. I don't want to.
We'll have to redo this again in the near future.
Yeah. I will make it quick. I think what we're seeing is when interest rates spike like they are and there's so much volatility, what happens is investors are shy to pull the trigger on buying real estate. So that's why real estate's starting to slow, and it was on purpose, right? That's the whole point, to slowing the economy down and increase rates and slow everything down. However, the cost of living is still high, and a lot of investors that have money in an IRA or what have you, they're in need of parking that money. The majority of our investors, you know, I'd say probably 40 to 50% of our clients, when we get on the phone, they say, hey, I have to put this money to work, or I got, you know, for tax purposes or what have you. So you're seeing this kind of aggressive, more bullish approach than you saw in 2008 to park their money and get into something a little more secure. So my opinion is, right now, as the market's slowing for real estate sales and loans and mortgages, what you're seeing is an uptick in investor activity. And because of the volatility, because of FTX, because, you know, Elon Musk can send out a tweet and crash stock, you know, a lot of, especially boomers, they're not interested in the volatility. They have a fixed income. They have to make good moves. And so you're seeing investors they're becoming more savvy, but they're looking at operators like us that have a track record. They have to put their money to work. They want cash flow and accumulation, so they're looking for debt and equity. So they're a little bit more diversified. But what I would like to tell everybody is, right now, when the real estate market sales slow is when investors start becoming more proactive. That's why you're seeing our uptick on activity on marketing, because we're going to see, I just doubled my marketing ad spend in our output, because we are seeing the activity of investors starting to pick up.
Well, you brought up ad spend. I'm assuming the pay-per-click, either Google or Facebook. Can you tell us a little bit more about kind of the process and how it works? You're literally paying something. I know you do a lot of organic, but you're paying for traffic as well. How does that work out, and what's your process?
So I'll back into this really quick. The best advice I can give somebody when it comes to marketing is don't pay a marketing firm to get involved into marketing for capital raising. And the reason is because they all say they do it, and they really don't. And two, it's because there's so much compliance involved. You want you want to have an in-house team or someone close to you at least that eat, breathes, and sleeps your business, because it is, you need someone to be able to properly pitch not only the investment, but the brand. And that's really important. Right now, we have, for the most part, every platform you can think of. We're doing podcasts, webinars. We have YouTube, Google, websites, landing pages, Instagram, Facebook, Meta, like everything we have. We basically come up with a budget. I have a strategist, which is, my opinion, one of the best in the world. I'm very blessed to have her, and in essence, my entire marketing team. But she is very data driven. She screenshots stuff and sends it to me and says, "Look, we're getting more activity. We're growing. We can keep putting stuff into it." But the idea is to try all the platforms that work, but also identify that each platform has its own personality and its own culture. For example, LinkedIn is more B2B, more higher net worth, more business. So a lot of my marketing will be more suit and tie, more institutional conversation. I deal with a $100 million fund. We do audits on our fund. We provide reporting, a lot of those type of conversations on LinkedIn, where Instagram and Facebook is a little more lifestyle. So now you want to promote more of a lifestyle. You're constantly farming to people. So you just kind of have to know each platform and the culture of each platform to be able to maximize your returns on your investment.
Got it. And I'm going to call you out for lying right there. The last time I wore a suit, I did a vow renewal in Portugal 3 years ago. Literally the last time I wore a suit. And you're talking about wearing a suit all the time. When's the last time?
No, not when it's 110 degrees outside. I did wear a suit. I was actually speaking at an event in Redondo Beach, I think about 2 months ago was the last time I wore my suit. And it's funny because every time I unzip that thing and look at myself, I'm like, when was the last time I cleaned this thing? You're like, I got to get this thing cleaned.
As an attorney, it used to be act the part, wear suits. I have this massive closet just full of suits that are so dusty at this point. It's kind of a joke.
Well, that's why I have them in the little bags, because they get so dusty and I don't wear them as much anymore, but yep, true.
There you go. It's the difference of act as if and, hey, I made it and I don't need to act. This is who I am and how I come.
And that's kind of, I have tattoos. And so I've kind of worked against the grain my whole life. And I had to really prove myself through hard work and because people do judge a book by its cover. Now, though, we're at a point where nobody even sees it because our level of success has surpassed what the judging a book by its cover does, play. So I encourage everybody, no matter what your hurdles are, you just got to power through and let your success speak for you.
And get a sleeve of tattoos while you're at it.
Hey, listen, I got my boys on there. I have God's love, agape, so normal good stuff. It's not bad stuff.
Love it. Well, I won't share mine because it may not be as Christian.
I don't want to see your lower back tattoo, Nate, okay? I don't want to see that you got a tramp stamp, dude, okay? Please don't have a tramp stamp, man. I see guys out here at the river with tramp stamps, and I take pictures and post it on social media, by the way.
Okay, well, back to business at hand. You talk about a marketing team, and I can tell you that almost nobody on here has a marketing team. Now, I'll tell you what we have. We've got an in-house marketing team. We have, full-time videographers, email guys, and social media specialists. We also really leverage offshore VAs to play certain parts as well. It all kind of comes together, but again, kind of like yourself, we spend a lot of money on marketing. What does your team look like today, and what did it look like when you were first getting started in the social media space?
When I first got started, I really just kind of had my own cell phone and my own videos, knowing videos are really going to go far. What you really want to try to do is be very articulate when you're producing content on what it is you're trying to accomplish. The idea is to try to show the conviction that you believe in what you're pushing or you believe in what you're involved in. And the only way really to do that is typically face-to-face meetings. And if you don't have face-to-face, then video is typically the other alternative. So that's what we did originally. Again, emails was one thing. And that was pretty much it. I had one guy that was doing a lot of emails, but he was also internally doing processing for me as well. So we had to really try to figure it out from the bottom, man. I mean, I'll be honest, a lot of long hours. I did a podcast not too long ago, and like we were so broke, I would stay in the office and take the shower at the gym and use the electrical at the office for air conditioning because it was cheaper than going home and running the air conditioning. So I was that calculated, but I was dumping everything I had back into the company. So the same thing, kind of burn the bridges and throw all in. But now my team, I have 5 people on my marketing team, and I think out of that 5, they're probably all wearing about 3 or 4 different hats. I would tell people that, or try to give some guidance in a manner of don't go too far over your skis on commitments, meaning like you have a big project and you have to raise all this money by a certain period of time. If you haven't gotten into a rhythm with raising capital and figured out a way that is allowing investors to build trust within you, you want to try to start small. Do like maybe $1 million raise, a $2 million raise, start building your track record that way, and then start migrating into larger transactions. Because the very first thing some of these people are going to ask is like, how long you've been in the business and what's your track record? And they're going to base their judgment and making an investment on multiple things, but those are really very common. So right now, I kind of have I hate to say it, Nate, but I'll be honest, I'm kind of a workaholic. I have a really big drive. I always have. And so I'm the guy that makes big commitments, and now I have to perform. So, which has worked for me in some cases and also has not. So to be able to say start small is probably the smarter way to go. We did though, until we got into a rhythm. But again, we have about 5 people that are managing all of those platforms, content creators. We have posts that go out every single day, maybe sometimes a couple times a day, whether it's on stories, Instagram, Facebook, LinkedIn. So you want content to constantly go out. And a lot of times it's hard to do it on your own.
So you have content constantly going out, and we used to do 15 times a day. It was just insane how much content we were putting out. But it felt more like we were just chasing views, which was a pretty ridiculous way to approach it. It sounds like you're doing it way more meaningful. Is it always about business, or are you still focused on lifestyle and here's my kittens?
I got to a point about 2 years ago that I wanted to bring down the mask. And what I mean by that is I see a lot of people that are trying to drive one thing home. And if you're really, if you're really driven by one specific thing, it's good to touch on that and stay on it overall as the brand or the heartbeat of your marketing. However, what I'm realizing, and this is kind of something you guys would probably appreciate, inside my old office, I had a wall that had, when our investors make an investment, we ask our investors to send us a family photo. And I had a wall that our client, or all of my teammates, when they come into work and come into the office, they would see and walk by that wall of pictures. And I would say, these are the people we're working hard for. These are all of our investors and their families. And what happened was as I continue to have and grow my investor base, I'm realizing that this is a personal relationship, and that completely changed the way I do business. So now I'm more personable on every marketing than that you can imagine. Like half of my marketing is really me, my family, and then the other half is maybe some hardships that I've gone through. I think a lot of people are fearful of sharing hardship. When you share hardship, you build connections with people, and the reason is because everybody's got hardships in their lives. Everybody, I don't care who you are. So it makes you look real instead of always trying to look like everything's so great on social media. No one really believes that, and everybody knows it. So once you start building an emotional connection with people, you'll start gaining their trust, and therefore you'll probably get investment. So I have people all the time. Every time I post something about a personal hardship, whether it's my marriage or my kids or some health issues or what have you, I have people that text me and say, "Hey Ryan, I can't wait to invest with you. I'm saving money now." Like that's the response on Instagram kind of thing. And it's so cool because ultimately once you get past that part of always got to be business oriented and you're trying to push, what you'll realize is the people that are writing these investments, when you ask them, why are you investing and what's this for? What's your long-term goal? you'll hear that, my first wife died of cancer and this was a life insurance payout or this or that. And you're like, wow, like these are real individuals with real hardships. And so you want to, it's a personal relation. Investors see investments all the time. There is so many people marketing for new investments online everywhere you go. Every time I log into social media, there's a new investment opportunity. People don't invest necessarily just in that particular investment. They invest into the operator and the team that's behind that investment. So you want to be able to highlight who you are and make sure you're telling people who you really are and get them to like you genuinely, and then they'll probably make an investment. So you want to do kind of it all.
Love it. That does lead into at least one of the questions that we have from the viewers, but let's please give them a few minutes. Harrison is asking, how do you balance the corporate nature of what you're involved with the fun, the lifestyle brand that you've created?
So I brought on a CEO that is a Wall Street guy. And when you meet him, he is just perfect Wall Street guy. I think right now I spend the majority of my time, and that's a loaded question, but I'm going to try to get right to it. I spend the majority of my time now with my securities attorney, right? I kind of deal in more of the business development and then more of making sure that everything's still, right on the back end. And I would say that it's really hard. The institutional world's shifting a lot. We can cater to RIAs and broker dealers, which I'd love for you and I to talk on, but the RIAs and broker dealers. But what I will say is that when I share with my investors, when you look at our structure, you look at our funds and who, you as my securities attorney, once you look you up and see your track record, that goes a long way. So what happens is I'm utilizing institutional methods to build out my funds and structure my assets and the investment opportunity. So I'm able to continue to bring in that corporate feel when you look into our investments, look into our pro formas, how we manage the overall company. But then you can see that I'm a normal guy at the same time. But once you see my team, then it all kind of makes sense on from a marketing side to who's dealing with back office, my controller, my vice president. And that kind of says, okay, now I can see full circle on how it works. So it is a hard balance, but I've gotten to a point where I'm realizing that the institutional world is kind of fading, to be honest with you. And even Jamie Dimon said it, private equity and smaller fund managers are going to disrupt the institutional game. So, by being myself and just allowing the market to shift the way it is, I feel like we have a big catcher's mitt and we're out there, fielding balls.
I love it. And I want to show everybody one of your pitch decks for one of your deals, because it is like, here's how you're portraying yourself to the public and what it looks like for everybody to just like, wow, that's awesome, but also to learn themselves. But if you're okay with it, can you set the stage with what are you raising capital for now that you actually shared with me earlier?
Sure. So the pitch decks are one of the most important tools you'll ever have, not only from a compliance side, but you want to be able to get to brass tacks and share with your investors exactly what it is you're trying to accomplish and give them bullet points of that opportunity, what they're investing in, where they're investing into, what's the demand, what's the interest, the returns, how long of that investment is it, and obviously the methods in which you're developing, in my case, real estate. This project is very, very dear to me. This kind of is one of those pioneer projects that I think can change the game. And of course, I'm biased. So I would obviously say that. But this is actually mine's the best, I swear. But anyways, the point is that this is actually in Lake Havasu, Arizona, which is a huge recreational place and also heavy in retirement community. It's one of the most desirable retirement communities on the West Coast. And during the pandemic, when California shut down, you have 22 million people that it's about a 4-hour drive from here. And so this place just exploded. It has been forever. I've been coming out here for 35 years now. My father retired LA County Sheriff. He lives out here. And I actually, so if you stay right there, that circle, go back one. That circle right there in the highlight, that's actually the new project we're raising money for. The one to the right where it says Paradigm Storage, this is in the picture. That one is actually a current project that we have going on. That's 225,000 square feet of boat and RV storage condos that are all basically man caves. So we custom build them and then we sell these to, in essence, millionaires that want to put in their high-end cars, their boats, their their RVs, what have you, and to kind of have a place to kind of hang out and tinker. And I don't want to say man caves anymore because the amount of women that are buying these too is pretty impressive. So we're just going to call them the caves. But this project is 18 acres right next to that 225,000 square feet. One of the big things that I highlight is that it's right next to the mall, which is 725,000 square feet of retail. On the other side of the highway is an airport. And so therefore you can see the demand and where it'll go. And the live, work, play aspect is important. So again, location. What we're building ultimately is a community of residential single family detached one units. And what I mean by that is each one of them are basically glorified townhomes, and they're designed like barn dominiums, which is very trendy. Now, because I build all my storage with metal, I'm going to create a metal barn dominium look, which helps me compress my costs. And therefore I can hand that cost savings over to my end buyer and bring down the cost. Because right now, this market, you need to stay focused on more affordable homes. And this is a secondary market. So if I'm able to build something that's very trendy, desirable, and hits all the metrics for the demand, then I can save money doing it. That's really important because then I can offload these for a lot cheaper than what you would buy a normal 3-bedroom, 2-bath house for. We have 4 different floor plans from 3 bedrooms, 3.5 bath, and there's about 125 units there. But to piggyback off that, what we did was we're building a big public gym. And I'll make this quick. When we were doing our numbers, we realized that our insurance costs to manage the community center was so high. So for example, out here in Arizona, it's Vegas and Phoenix, it's hot. So when you build a residential community, you got to have a pool and a gym and a little community center. Well, as I was going through my budget, I realized to manage that and insurance costs were so high, I would have to pawn that cost over into HOAs to my unit owners, and it was going to move those HOAs up too high. So I made a decision to separate the community center from the residential, bring in a big gym operator, open up a gym that has like a UFC and a octagon and I mean like CrossFit and regular gym. I mean, we're bringing it all in, man. 30,000 square feet and with a huge pool, and then bring in a big gym operator to cover the cost of that building. And then my residential owners can actually have access to that pool, that amenity, and that gym. So it's really been out here. We need a gym. Their gyms are not that popular here, so they need some help here. So we're kind of marrying up, kind of a private equity play where if you look at Gold's Gym sold for $100 million, back in 2011, I believe, and they only had 12 locations. So if we take this exact footprint and we do 5, 6, 7 of them, we're hoping to do a lot more, but over the next 10 years. We can have the gym separated from the residential, and it's 2 different, private equity plays. So it's very profitable for any investor who's involved.
Got it. And let me kind of just explain or share with everybody. I actually don't just share this because it's a great project, but this is a very professionally done pitch deck that really covers all the information if you are planning to do an investment. Sitting here on the disclaimers because of how important it is to include that legally, but just the information from background, performance, your team, yourself, all of this is just really important information to share about your project and what you're doing. And I do want to say for anybody that wants to get a copy of this, wants to get more information, you can follow this QR code. We'll throw in chat a link for it, but it's going to send over this pitch deck and a little bit more information about like how to stay safe if you're actually doing an investment deal. So you can check out this QR code or just reach out. Now, we do have a couple more questions. Reagan is asking, what trends are you currently seeing in the real estate market, particularly in the storage units? Sounds like you just are finishing one up.
Well, not to be biased here, right?
Totally biased.
Totally biased. But so the boat and RV, the storage, self-storage market, if you look at, for example, I always talk about Green Street Advisors. They're a third-party data company that provides data for other fund managers, hedge funds, pension funds, anybody in the real estate space. And they're pumping out content all the time from a international and national perspective. And they're showing that self-storage and boat and RV storage is continuing to increase in desirability. And that's really kind of wild to think about it, because in 2008, boats and RVs, they took a huge hit. Anything that was luxury hit hard. What you're seeing is the difference in baby boomers now are going into retirement mode. So therefore they have a fixed income and they don't care about, necessarily what's going to happen in the market. They work 30 years for their 401ks and they want to buy their boats and they want to lower their cost of living and they want a better lifestyle. So they're continuing to buy those toys. They're not going to stop. And a lot of them, I think it's like 85% of RVs and boats and all that are being purchased in cash. So if they're not leaning heavily on finance, that's another metrics to pay attention to. So if you're seeing the largest generation with all the wealth is buying and spending, their spending habits are over here, I'm sure you can identify there's demand there. And that's really what's happening overall. So we actually, with the pandemic, we were, as you guys know, we have Europa Village on our platform. It's a $200 million winery there in Temecula. We helped raise a lot of capital for them. We had Office in Denver, which we shut down right when the pandemic hit. So we were very diversified. But what's happened since the pandemic and kind of where everything's at in the market now, we've really streamlined into an asset class that we feel we've really just taken root in. And so we actually have, so not just not just these two that you saw, we break ground on another one that's just about 5 miles away as well. So we're really happy about it. I'd say we have collectively about 750,000 square feet of projects right here in Lake Havasu area.
Love it. And I do want to bring up that you're talking about investments. Securities attorney here. So I do want to make it clear for everybody that is listening that, yeah, Ryan's allowed to share this stuff because he's doing a Regulation D, Rule 506C investment offering, which basically says you got to be a high net worth accredited investor to be able to participate. Very important thing. That's the reason we're able to talk about this. However, that being said, we're working on a different type of deal for you. And if I can share that as well, because it's going through the SEC, that's going to allow everybody to invest, which is really important. You're kind of out there in the social media, bringing it back to why everybody's joining, to be able to allow everyone to participate with you. Let's be honest, boomers aren't on social media as much as the other, 80% of America. With that, I mean, I know we've worked with a number of social media influencers, and I'm sorry, I'm throwing you in that bucket, as good or bad as that may sound.
Okay.
And it's been a great strategy to be able to really reach out to everyone. But to bring it back to why we're here, I know that you're actually running multiple channels between platforms, and I think even multiple channels on some of the platforms. Could you speak to your different strategies for social media and what you're building, the different channels, and why?
So what we try to do is we try to wherever we're marketing, we try to funnel all of that to like a website or a landing page for people to get to either watch videos or look at, like, for example, a landing page for the Barn Caves, which is the pitch deck you just saw, ultimately is a pitch deck, just web-based, right? So let's say I would say one of the things I'm focused on more now is my own personal social media. All of my personal pages seem to be getting a lot more traction. And again, it's because I'm implementing different strategies of being personable, being more, sharing more personal stuff, spending more time with my family, showing, me walking my sites every single morning at 5 a.m., me kind of sharing some market updates and kind of what I'm seeing. I'm kind of just being a normal person. And I think that's what ultimately people really want to see. So my strategy now is to try to build awareness through that platform of just that I exist and that you can invest with us and we have a track record, what have you. Our LinkedIn is another one, because right now we are getting to a point where we're raising a lot of money for multiple projects. So raising money with smaller investments is actually, believe it or not, I kind of enjoy it, not only to build a relationship with investors, but I can control my destiny. We know what our ad costs are. We know how many touches we get. We know how many leads that come in. We can identify based on that data when we're going to raise our money. So that's actually nice. but it doesn't hurt to get larger check writers. And so now we've gotten to a point where we can start targeting through LinkedIn and YouTube to go after RIAs and wealth managers. A lot of times we use another system which is called Preqin. If you're interested, if anybody's interested in hearing about Preqin, there's other databases out here. I think they're the probably most powerful one, but it's like $25,000 a year. But you get access to basically every fund manager, every pension fund, hedge fund in the world, and where they're investing their money and what recent investments they've made. So for example, let's say I wanted to, develop a project that's multifamily in Phoenix. I can actually go into this platform and I can hone down any institutional equity or debt partner that was on that platform or on that project, and it'll tell me who invested into that Phoenix area for multifamily, and then I could target them. So you can actually go after these larger institutions and hedge funds. And I'll give you an idea. We're working with a group now, and this is through social media, that is actually a family office out of Spain. And when I say family office, this is a group of billionaires that basically sat down and said, we need to bring in analysts, and we want to bring in guys that can vet projects all over the world, and we want to diversify and invest our capital. And one of the big mandates that they have is to invest into the US. So we're one of those platforms for them to look at, and they want to basically invest, and they actually gave us an LOI for 400 million to build the now, of course, I've had a lot of these conversations that didn't go through. So until the fat lady sings, we don't know here. But what I'm saying is that you can utilize these platforms to get in front of larger dollar amount players. So to kind of piggyback off the institutionalized, you need to have now the right tax documents, the right tax people involved. I use Markham LLP out of New York. They do all my tax prep. They did our audits. I use you for my securities offerings, which is really important. So all of these people in my back end have to align to get the larger institutional players to play ball. So you can use different platforms to get in front of different people to get larger check writers as well. So all of those platforms, you got to understand what your target market is and who you're trying to target and what you're trying to accomplish, and then create your content accordingly.
Got it. A couple of things that I just want to point out to everybody and anybody that is checking this out is you are very data driven. Where you're reaching out, how you're targeting, the data is what truly at the end of the day directs the marketing, with kind of the first biggest step being awareness. You said that as well, because at the end of the day, if more people know who you are, your audience is larger, your community is larger, that is the awareness that you can start to, and these are the next steps, funnel segments and parts of that community, of the entire audience, into your particular investment opportunities or business, or however you're trying to maximize the versatility and use of this audience. For you, Ryan, how do you funnel from you're talking to everybody? How do you funnel down to here's who actually want to reach out to?
So we have, for example, what we've utilized is kind of like a screening method that, let's say someone clicks on a marketing ad for off any social media, it'll get pushed with a questionnaire. Have you invested in anything before? Are you an accredited investor? Right? How much are you looking to invest? A little bit of write up on themselves, and there's other thing. But what happens is they go through that lead process. Once they hit submit, then they're, in our opinion, a little more real. So now we can actually contact them and say, hey, thank you very much for your inquiry. We know you got an email, which is an automatic email. As soon as that lead is triggered, they get an automatic email and text message and says, thank you very much for your inquiry. Here's a pitch deck and here's our calendar. Feel free to schedule a call with us at your convenience. Meanwhile, one of our executives will be contacting you to answer any further questions. So something just as simple as that.
So I want to repeat what you said, because anybody that's saying, can I actually do this? The answer is yes, but it's by posting ads, sending out information through your social media content, letting people know what to do. But ultimately, you want them to click on something, going from awareness to prospective, possible investor, Then you qualify the potential investors. Those that aren't qualified, you send them a nicety, but you really can't do much with them. Once we get to that point of we're doing this larger regulation A, then everybody becomes suitable. Wonderful. But you have to qualify the people that are interested in investing. They've clicked on that button. Mm-hmm. And at that point, you want to immediately communicate with them. This is important. And following up, being responsive, not letting a lead kind of languish is so important to really maximize your chance of closing and getting investors from online. So I really, this is what you explained, but I just really want to hit home for everybody because it's 1,000% correct and true.
Yeah, and I would add, think about it, like the sooner you contact them, the better, because a lot of times if you let a weekend go or 2 or 3 days go, sometimes they'll forget that they clicked on that ad. So the idea is to try to make contact with them as quick as possible by all means, whether it's phone, text, and email, basically the best way to get a hold of them. There are times, depending on the nature of the email, we'll look some of these people up and look them up on LinkedIn and social media, find out what they do for a living, and then contact them and kind of speak their language depending on their occupation. But there is a lot of strategy involved, but just know that it is a high touch market, meaning when during the pandemic and everybody was making money, in essence, we would talk to an investor. They were able to see enough information through the pitch deck and what videos and so forth that would just continue to pump out for content for them to feel more comfortable. But it would typically be 1 call, maybe 2 calls, and they'd move forward. Right now, because of the volatility, people are worried. They are really worried. They are worried about what's going on with the elections this year. They're worried about losing the money. They don't want to go through 2008. And a lot of these people want to leave a wealth for their grandkids or their kids. So the reality is that this is going to be a much higher touch environment. Patrick Bet-David said it, and he said it great. He said, this market, you're going to work harder than you've ever had before if you're wanting to build something. And it's true. So be prepared to work really, really hard and be very transparent. This is my first time, or maybe this is my 5th time raising money. This is my backyard. I know what I'm doing. And make sure that you have your ducks lined up to pitch them properly, because it is a high touch environment.
And that's wonderful. Let me ask you a little bit more qualified how you follow up with people. You send out an email. The actual talking to people, almost a lost art nowadays, is so very important. Yeah. But in terms of following up on an ongoing basis, do you have like an email routine, a newsletter? Like, how do you keep reminding people that you're there, that you're making deals happen?
So we have a couple different ways, whether it's consistent emails, because once these people come in, even if we don't make contact with them, and let's say we call them a couple of times, they don't make contact, no responses, we leave them in an email database until they want to opt out. So we constantly farm, whether it's, we use Juniper Square, by the way, for our back end and for tracking. So investors have their own portal. So we'll send like a video about transparency and having a portal and access to your investments and so forth, down to me being on site and showing a video or successful of a ribbon cutting or what have you. So we're constantly leaking out content to those in emails, but I'm utilizing that same content and I'm putting it up on all of our social media. So that same video that I'm putting in an email is going on LinkedIn, Instagram, Facebook, right? We're kind of pumping it out across everything. So what we're realizing is a lot of people that follow us on Instagram, for example, will automatically follow us because they saw an ad that we're pushing and now they're getting emails as well. So what they're seeing is us high touching them in every which direction. It's the same content, so it's constantly farming. But we do also follow up. So what will happen is like a month or 2 will go by, and then somebody from my team will actually reach out to them and say, hey, we know that you called or reached out a few months ago. We just want to give you a courtesy call. If you're interested further, please let us know. So it's just stuff like that we're constantly touching. You'd be surprised. It's called the resurrected list. And you'd be surprised how many people we resurrect that may have reached out a year ago or 2 months ago, and all of a sudden they're like, okay, we're ready, kind of thing. So it's really, like I said, a high touch environment.
Well, I love it. So unbelievably important for everybody. I kind of push everybody to, hey, start a newsletter, start communicating, start reaching out. Use that same information to get content online where you're just making that and creating the awareness to start to funnel people down, to start the follow-up. And you're doing an amazing job hitting them from all different directions, because it is a well-known statistic that generally you're touching people 6 times before they're ever even thinking about saying yes.
Yep, it's true. It absolutely is true. The thing that's helping us and give us a little bit of advantage, especially because you always want to market around the area, especially for real estate. You want to do marketing around the asset. So people that love their community want to invest in their community and the growth of it. So we always market within about a 50 to 100-mile radius of that area. And Lake Havasu, you kind of have all Southern California, Vegas, Phoenix. You kind of have all those areas that come here for recreational use and for lake life. So we can market to all those areas. However, what we're identifying is that we can actually ask them, why don't you come over and take a site visit, since we're building 225,000 square feet right next to the investment opportunity you're looking into. And typically when somebody gets on site and sees what we're built and the quality of our development, it does help make them feel more comfortable that this is a real deal. So over time, we didn't have that, right? We had to get to a point where it's harder to raise money on your first raise, but over time it gets a little bit easier and your network gets bigger. And a lot of our referral sources as well is from our existing investors. So for example, even CrowdStreet pushed it out. They said 72% of all new raises for a new opportunity comes from existing investors. So once you start acquiring investors, don't be surprised if they don't diversify and go into multiple projects. And that's why we have Juniper Square, because once you put in all your information, you could literally invest and get your subscription agreements, accreditation, all of that through Juniper Square and make an investment right there without even having to talk to anybody inside our company. So now they have a portal that shows all their assets, when they get dividends, what their cash flow looks like, what their net worth looks like, all that fun stuff. And people can print out documents and it's great. So you want to try to provide those tools as well and transparency. And one of the things, and I'll sum up with this unless you have more questions, one of the biggest things that we did, and I'm not sure why not a lot of people are doing this, but we put a construction camera on every one of our sites. And that's because geographically I may not be close to it, but if I know I have lumber or I have steel or a building being delivered, I want to be able to log in on that day and confirm no matter what, as if I was there, that it's being done. I can count bodies. I can kind of make sure that the project's moving. What I did was I provided access to that link that I would log in to all my investors. So now my investors can log in live in real time, 365 days a year at night, has night vision. They can turn the camera and look at the entire site, and they can watch the project being built. So our updates, we don't have to talk to our investors that often. We provide monthly updates through video, and then they have access to the camera and they got Juniper Square. So once an investor comes in, as long as you continue to give them a red carpet treatment, the likelihood of investing into the next project after you're showing proof of track record, the likelihood of them moving forward is much greater.
I absolutely love it. One of the most important things that you said without saying is raising capital. It's like turning a pebble into an avalanche. Your first deal is the hardest, and it just keeps getting easier as you build that track record, as you build that know, like, and trust that the investors have to have. Whole lot easier to start that. I guess it's rolling uphill, then we're pushing the boulder uphill, and then just rolling with it downhill.
And I tell everybody, I have a lot of people that have come to me. I actually have people that have come to me to pay me to coach, and I just unfortunately don't have the time, and I don't really care about the coaching side. But I try to tell everybody, like, when you come in here and you want to start raising money and you actually go down this road, the money that you spend on a fund and your admin and all the fun stuff that goes with it, it's a big investment. And once you get to a point where you're so far over your skis, you realize this is a big deal. And it is very important that people take it very serious. For example, when you brought in data, my burn rate's $150,000 a month. So if I'm putting that much money into it, we have huge commitments and we have to perform. I'm going to look at data and what's going to be the most aggressive way to save money, but get the most ROI out of our marketing strategy. So we're at a point now where we're very, very committed to this and very committed to our clients and very committed to, no matter what, riding this wave the best we can. And so I tell everybody, if you want to get into this, number one, it's a gift. If you can really get into it, it's a gift. But you can control your destiny. If you're able to raise money and develop projects, there's nothing better in the world. You can ride any wave that comes your way. So I tell everybody it takes somebody that can take on a lot of stress and someone that just doesn't has a mindset of never stopping and moving forward. And until you hit your mark and you're successful, you're not going to stop. So it's one of those things I tell everybody, like, you see all these HGTV and all these people trying to, hey, come invest with us. And it's all like, it's not that way. It's hard. It's really difficult, but it does make you, it does make you a better person when you realize you wake up with a purpose and you have a lot of people that you're responsible for. It actually feels good once you start turning that corner.
At the end of the day, I think that you've really accomplished what we set out for. If you're trying to fund your business, your real estate, buying, building, whatever it is, the power of social media, the power of leveraging these different channels, you always start at the beginning and you grow and build from there. But everyone that is checking this out, it is possible. It is realistic. So go out and make it happen.
Hey, Nate, I got a question for you, because I have a guy who signed up. He's him and his wife are kind of moving over to the RIA world. Mm-hmm. You want to talk a little bit about broker dealers and RIAs and how fruitful it is and how important it is for someone who has a Reg A to have? Would you touch on that for me real quick?
I'll touch on it real quick. We're up on our hour, but one of the most important
We'll do a second round.
Yeah, you know what? How about we just plan for another one of these next month? Take a little bit more time of actually planning stuff. We actually got a host of questions that didn't even get a chance to touch. All right. Quick answers. Key milestones with the barn caves. Where are you at?
So, all right. So you'll like this. So last Thursday, I met with the city, and the city loves I'd like to think they love the entire concept. So they actually gave us a date and said, get all these documents in for an August 7th review. And as long as everything, pencils out and we get everything, they're going to, go ahead and approve what we're building in regards to the community center. We still have some more legwork to do on the residential side, but that's kind of phase 2 anyways. We want to get the community center up to set the tone to show what the residential is going to really kind of look like. So building the community center first is important. Typically most phase 1s have residential and a community center involved anyway. So we're going to make that happen. But we're raising more money than we can spend it right now, to be honest with you. So we are
doing too good of a job.
Yeah, well, it's because we're still in that kind of downtime phase of like approvals and so forth. So we're raising money until those approvals. So we don't necessarily need all the capital right away. But yeah, we're well underway, and we have all of our design and everything pretty much done.
Got it. Got a great question for Doug, but I'm taking this one. How does one determine whether to set up a 506C or 506B or crowdfunding, assuming we are raising money? And I can tell you, Doug, it just depends on your marketing. Where are you going to find your investors? If you're going to do it online through social media, you've got to go the route of the accredited only, or go the route and the steps of doing a regulation CF, the regulation crowdfunding.
Yep.
And let's see, I hate to miss anybody's question. Daniel has a question. How far can you go on media so that you don't get in trouble with the laws? What are some of the do's and don'ts?
Okay, so I will tell you this, and this is actually very serious. The SEC, from what I understand, is actually creating kind of a department to watch social media marketing now, because it is such a big deal. And so number one, disclosure, and no promises. You cannot make promises. It's always projected, never any promise. People call me all the time and go, Ryan, what's like the guarantee? I'm like, this isn't for you, dude. Like this isn't an investment for us, because there's always risk. And the bottom line is you have to feel good about this investment. I want you to know what you're getting yourself into. So the most important thing is disclosures, and don't make any promises on returns. Just make sure you are almost like, I'll give you an idea. So the one thing I love about Nate is in his fund documents, he highlights and capitalizes high risk. And before I was like, why are we putting all these high risk disclosures in there? I take those out. And now that I've grown into where I'm going, I'm like, I like that, because it actually protects me. If God forbid the market falls out or something happens, it's protecting me. But they are obviously clearly they will read this and know that this is a high risk investment. And so by just being real and being honest is important. But again, disclosures is number one.
And no, the number one you missed, have a great attorney.
That's, well, yeah, of course.
I mean, just almost, I don't care if it's us, love it if it's us, but make sure that you are protected, you're doing things right.
Mm-hmm.
And if you want more information, check out this QR code. Love to chat with anybody, but at the end of the day, just make sure that you're doing it smart, you're doing it right, and staying out of trouble. So thanks, Ryan, for joining today. Truly appreciate it. You know what? I know we can go on for another hour, and I actually think we should. So let's plan to do another one of these next month where we can dive in a little bit deeper, go through kind of the ins and outs of raising capital, ins and outs of how to make real estate deals happen. And most importantly, I'm going to Paris for the Olympics, so I'll share all about that next time we connect.
How cool, man. All right. Well, safe travels, and I'll talk to you soon. Thanks, everybody, for joining.
Appreciate y'all.
Bye-bye.